The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another episode of The Market This Month, this October 2025. Today, we're diving into a market that's showing remarkable signs of vitality. September figures reveal a notable uptick in trading volume across key exchanges in Canada. The CSE experienced a 74% jump since September of 2024, while we also saw a 9.8% increase on the TSX and a 190% increase on the TSX Venture. These numbers suggest a real resurgence of activity and investor interest in the resource, tech, and broader equities. What's driving this movement? Initially, much of the activity was fueled by gold, but now we're seeing a broader recovery across other critical segments of the commodity sector. Base metals, such as copper, zinc, nickel, and aluminum, are gaining momentum, driven by increased demand for infrastructure, electric vehicles, and renewable energy projects. These metals are fundamental building blocks for the Earth's infrastructure and manufacturing industries. Simultaneously, rare earth elements are becoming more prominent. These are essential for producing high-strength magnets used in wind turbines, electric vehicle motors, and advanced electronics. The renewed interest in clean energy technologies has heightened demand for these materials, which often face supply chain bottlenecks and geopolitical constraints. In addition, battery metals, primarily lithium, cobalt, and graphite, are experiencing a surge. These are the core ingredients for battery production, vital for electric vehicles and energy storage solutions. As governments and automakers push forward with EV adoption and green energy goals, the demand for these metals is expected to continue to rise, impacting mining investment and exploration activity globally. Commodity prices are climbing in tandem with stock volumes, and investors are starting to recognize the long-term potential embedded in these supply chains, an importance that's reflected in financing activities across the sector. While large-cap technology continues to lead, there's a broader trend of diversification. Commodities, smaller tech firms, and selective financials are all gaining momentum. This is truly full risk-on environment. Even meme stocks are making waves. Interestingly, utility stocks are holding steady, partially driven by the rising need for AI power and data centers. Cryptocurrency is also playing a part, with Bitcoin accelerating after a lull, which in turn is energizing Bitcoin-sensitive stocks. Looking ahead, earnings will be in focus. Investors want to see how tariffs and rate cuts are impacting business fundamentals. So far, the macroeconomic signals look strong, and the market is pricing in the potential rate cut by the Federal Reserve at the end of the month. And I'm joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's so great to be in the same room, Anna.
You are in Vancouver joining me for this October. It is so great to see you. We had a long summer apart having to do this virtually.
That's right, yeah. Now things are heating up and it's the fall.
And now things are heating up and it's the fall. I love that. That's a great intro to our discussion today. Okay, on the topic of heating up, let's talk about volume. There's some really exciting stuff happening with volume on all markets in Canada, right?
Yeah, exactly.
Okay, what are we seeing and what is creating this increased volume?
Yeah, so if you look North America wide, the volume has been pretty steady on the bigger exchanges. You know, it grows year by year. But if you look at the smaller exchanges, so the TSX Venture and the CSE, they both have been kind of very dormant in the last few years. And now just in September, you really saw a big increase. That increase has been happening over time, but September saw huge increases, like 100% type of increases in those, both in the value of shares traded, but also the volume of shares. So investors are really starting to embrace those markets and come back and look for opportunities.
Yeah, absolutely. Okay. We've been talking about this for a few months now, and I can't remember exactly what month it started, but we've had an incredible year for gold prices, right?
Yeah.
Okay. So an incredible year for gold prices. There's a bunch of stuff happening in the markets. We kind of were expecting this, not that we had a crystal ball and knew this was going to happen, but usually when commodity prices prices hit those all-time highs, which we've seen in a few of the commodities, you eventually see it show up in the junior markets in the exploration world, within the resource sector, right?
Yeah, that's exactly what you see. It usually starts at the top and then just works its way down. And it always is a bit surprising as to when it's going to come and when it's going to work its way down. Because,
Yes.
the generalists start first and they're usually in, the biggest. And then as people start to gain return, then they start looking for what hasn't moved and where are the opportunities. And that's when, investors start to go down cap and the opportunities get greater. And then, they don't just go from producers, but then they start looking at exploration companies as well.
Right. And I think, one thing that's important to understand in the resource sector, especially, is the producers have built-in fundamentals. So the valuation of those shares they're kind of built in, right? And so when gold goes up in price, it's reflected in the share price of how much they're producing, how much gold, what gold's trading at. It's all somewhat built in. So when we have markets like these, the real opportunity becomes finding the next discovery, right?
Well, if you're relying just on the commodity price, well, then if the commodity price keeps going, but nothing continues to go forever, then where you get return is obviously on those cash flow multiples with the big producers.
Yeah.
But where the opportunity and leverage really comes in is with the exploration companies or the smaller producers, where their marginal cost of production is maybe break even, and then all of a sudden the price of the commodity goes above that, and that's where they really start to make money. And then you get investors coming in, and you get obviously a feeding there as investors are anticipating the commodity price going in, they'll get in, and then other people like to wait until that's confirmed, and when they do, then they're in, but it just keeps pushing. And then with gold, like the gold, silver, platinum, palladium, you name it, all the precious metals now are really starting to move, and they're hitting, in a lot of cases, all-time highs.
Okay, so, to expand on that, when we see precious metals hit these all-time highs or have this momentum, do we start to see it in other commodities? Is this kind of a leading indicator for the resource sector?
Well, historically, that's been the case,
Okay.
right? Is that, you tend to have, there's a rotation, and it's not always the same, this commodity moves, then that commodity moves, and then the following commodity moves. But you generally start to see, the commodities all move together, but not at the same time necessarily. So, we've had this move in gold. We've seen the base metals start to come up. The battery metals, which were almost left for dead 24 months ago, have now started to have a big rise. You're seeing uranium, because all this need for power, it's started to really ramp up. So you're really starting to see it. The commodity of oil hasn't really moved too much yet.
Yep.
But what we have seen is that because of the capital efficiency of a lot of these oil companies and how well they're managed, the oil company stocks have had, a decent move up.
Yep.
But if we ever started to see the commodity price rising, which would probably be on the back of economic growth, and if we're seeing copper moving up, that's forecasting that the economic growth is coming. Then at that point in time, you start to see oil join all the other commodities, and then you really have everything moving at the same time.
I noticed that OPEC did come out recently, and they have increased production of oil, right? And so why does OPEC typically do a move like this?
Well, they're trying to keep that price in check to a certain degree. I mean, there's a lot of political pressure from different governments in different areas around the world for them to, keep that in control, especially because our topic of conversation for the last 2 years has been inflation.
Yes.
So nobody wants to see that inflation come back. And, with oil being one of the large inputs in so many things, they like to keep that steady. So they have such an impact on the marginal amount of production that they can, increase their production or decrease their production to try to keep it within, a band.
Right. Because they're always working with supply and demand and trying to keep it at certain levels. I did notice, there was a while there where we didn't see a lot of exploration in the oil sector within the venture market. But I'm starting to see on the CSC, there's some activity kind of within that sector. So it'll be interesting to see if that continues on. Let's talk about large cap tech. What's happening there?
Yeah, I mean, we continue to see large cap tech doing well.
Yes.
Especially if you look more stateside.
Now, large cap tech in the States is really
mega.
Mega.
Yeah,
really.
we have now, Nvidia at 4.5 trillion.
Yes.
And the Royal Bank is, sub 300 billion.
Yes.
So it kind of gives you the size perspective there.
Yes.
And I mean, when we're talking large cap, like we could be talking, kind of 100 billion to that 4.5 trillion.
Yeah.
The earnings continue to be strong in that area.
Yes.
But now you're starting to see, again, a bit of a trickle down in that the multiples have become fairly stretched in not everywhere, but certainly a lot of that market.
Yeah.
And investors are starting to look, okay, well, where's their opportunity with rates now on the decline? That's also a backdrop for, smaller companies in a lot of cases.
Yeah.
And so we've seen, the large cap tech earnings moving, and now you're starting to see, smaller and mid tech earnings moving, and that's also driving some of the prices.
Right. And do you think AI has really fueled some of this continued growth?
Yeah, 100%. Yeah. I mean, if you look at the spending that's happening with AI, one of the interesting things happening now, though, is that there's all these kind of cross deals that are happening in AI where the chip manufacturers might have a customer, and so they're funding that customer to turn around and buy the chips. That's a little bit of a scary trend. It was similar to what we saw.
The snake eating its tail kind of thing?
Kind of in the late 90s, early 2000s. It didn't end very well that time. So hopefully there's a little bit better control this time. So something, investors want to be cognizant of and aware of, that, things don't grow up forever. And when they do, these are the type of things that can cause problems.
And when they stop growing forever, you don't want everything to be impacted. So if they're too intertwined, is that kind of what you're getting at? Then it can be bad for everyone.
Yeah, you saw the numbers like in that cycle in the late 90s, early 2000s, you saw the numbers really unwind because, customers shrank and they weren't buying, and there was investments, and, it just really started to unravel. The interesting thing back then, though, if you remember, was that technology market. The money left the technology market and went into the commodity market, and we had a commodity run for the next almost 10 years. That was extraordinary.
Okay, Bruce, the next thing I want to talk about is that we're entering a bit more of a full risk environment. And you have mentioned that we might even be seeing the resurgence of some meme stocks coming back. So tell us what you're seeing there.
Yeah, we've definitely seen that for sure. And I mean, anytime you get into this point in the cycle where you've actually seen earnings trough and accelerate, like if you're looking at the entire market, and at the same time, you're starting to see rates come down, which pushes that acceleration further. And then
because money's cheaper, right?
Because money's cheaper, yeah. And investors are looking for return. And now investors are taking that money and they've got good returns, and they kind of forget about the pain of markets going down or stocks going down. And so then they start stretching, and that's what you're starting to see here now.
Okay.
And so we're seeing that show up in multiple different stocks where you'll come in one day and a stock will be up 200 or 300% on the day.
Right.
On big volume.
Right.
And we're seeing more of that showing up in this market here.
Okay, so let's remind our audience, because it's been a few years now that we had some of the really good stories, but remind us the meme stock. What is that? Well,
it's really a stock that, kind of takes over based on online attention, right? So, if we go back to 2021, when it was really named the meme stock, it was because you had these stocks where people were making social media memes and putting them online, and then it would get more attention and people would buy the stock and they would go up, and they almost they weren't working in collusion because there was like a wide group of people that in a lot of cases didn't know each other, but they were all kind of talking about the same stock.
Social media movement of attention on it.
A movement for sure. And you're seeing the same type of thing happen now. And anytime this happens, you get certain participants in the market who have a strong voice. Right. And if they're starting to talk in a strong voice about, oh, this stock looks like potential, then, everybody kind of jumps on because they have, again, forgot about that kind of risk management approach.
Right.
And they're just thinking about all the money they can make.
And, based on that description, it's safe to assume that a good percentage of these people are not reviewing the fundamentals of the company, taking a look at their financials, talking to their professionals about whether they should be buying it, they might be kind of jumping on a bandwagon, right?
100%.
Okay.
Yeah. Like,
Which is scary for a stock. I think even, if you're running a public company, you want your investors to know what they're investing in, not just jumping in, because they will just as quickly jump out. So it can cause a lot of turbulence, right?
there's going to be a lot of volatility for sure. Yeah.
Right.
And in some cases, as you say, like they don't even know anything about the fundamentals. They just know the ticker symbol.
That's right. That's right. And they know the person who is promoting it on their social media feed.
Yeah. 100%.
Interesting. Okay, well, it'll be interesting to see if we get any stories back in the meme phase. Okay, let's on that note, let's talk a little bit about crypto. Crypto, I think Bitcoin I saw has reached another all-time high. And so we're starting to see, crypto has been doing really well. How is this spilling over into crypto adjacent stocks?
Yeah, I mean, you saw a couple of interesting trends there. One was, going back a few months ago as crypto kind of bottomed after everything that happened with tariffs and then started to accelerate again. What really became trendy in the market were these treasury plays where companies were maybe a widget manufacturer before, and now all of a sudden they started to, with excess cash, they started to buy crypto, and they had that in their balance sheet. And then investors were cluing in on this that, oh, they have it marked at, 60,000 and it's trading at 100,000. The stock should be worth more than it is.
Yeah.
And you saw that trend. That looks like it's kind of dissipating in some degree, like they're not getting the multiples they were. But what we're seeing now is that a lot of legitimate, Bitcoin and all other altcoin companies are starting to get more attention from investors. So that might be, ones that are running ETFs, that might be ones that are running, mining, that might be running other asset management approaches, and they're starting to gain attention again in the market.
Right. And those are companies that it would make sense, right? Because they're actually in the business of either mining or they're an ETF that reflects, a variety of crypto. It just sitting on the balance sheet, is again a bit of a it's maybe a tailwind that won't last long.
Yeah, it's hard to understand why with those treasury companies there would be a premium to the price of their assets.
Right.
I mean, the argument is that they have some alternate way to finance this, and that was what gives them the advantage. But ultimately, that gets arbitraged out at some point in time.
Yes.
And it just comes down to what asset do they hold.
Right.
If you look at the largest, gold holding ETFs or gold holding companies, they trade basically close to, the price of the asset.
Right. I see what you're saying. So they were trading at a premium. So that will be short-lived, I'm sure. But that's good to hear about the other ones. Okay, let's something that we talk about probably quarterly because it's when they come out is earnings. So I know that that's something that you and I've learned over the years and getting to chat with you, that every quarter this is a very important part of your due diligence process is taking a look at earnings. So what are you seeing now?
Yeah, I mean, it's something that we're always watching during earnings season. And, we're heading right now into getting all of the third quarter reports because we've just finished the third quarter and now we're heading into the fourth. So over the next several weeks, we'll start to see numbers come out both in the US and Canada.
Yeah.
And that really gives you, a sense of where the business is moving, right? Both from a quarter over quarter perspective, a year over year perspective, because we like to track that and look for acceleration.
Yeah.
And then the other thing is guidance, and this has been fairly important throughout all of this year. It always is really for that matter. But with this year, when we had all the uncertainty of tariffs, it was nice to have, CEOs come out on those earnings calls and talk about, oh, we haven't seen our market deteriorate. And in fact, we've started to see it accelerate, or we've started to see, these trends happening. And so that's always an important part as well. It helps, the analysts and portfolio managers just take a look and say, is this company still on track? Are they hitting all the endpoints I want? And, is the trend in their earnings acceleration, is it going up or going down?
Absolutely. And, I think it really is the touchstone for the investment community to see what's happening day to day, for a company. As a fund manager, is this like football season? Like we're entering the fourth quarter. You're really excited to see which team is going to win.
Well, there's, it depends a little bit on your investment style,
Okay.
right? So, if you're a super long-term investor, then the quarters really don't mean a lot to you because you're looking at a longer trend.
Okay.
But if you are looking at, earnings acceleration where, it tends to only last for maybe 4 or 5 quarters before, it does flatten out a bit.
Yeah.
That trend might be up the whole time, but you see that acceleration and then flatten out.
Right.
Then this is where things are important, right? Because you do see those trends both in the acceleration or deceleration, but also the guidance as far as like what the CEOs will see in the future. Because for the most part, they want to temper the markets both ways, both up and down, so that it provides more stability to their stock price.
Yeah. Yeah. Very cool. Okay, so we won't necessarily have those earnings out the next time we talk. But we'll see them by the end of the year, right?
Well, we should start to see them by the next time we talk. Yeah, for sure.
Okay, well, we'll see what's happening there. Okay, let's get into some CSE issuer news. We have a new listing. I want to welcome Commodore Metals. They have an exclusive option to acquire 100% of the Kiefer's Hannah project, which is located in northern BC. Welcome, Commodore Metals. We wish you all the best. It's a great time in the market to be joining us. And wish you great success. The other thing I wanted to touch on, and we talked about this today already, is just the increase in financing activity that we're seeing. And there was some fantastic financings that we saw in the CSE over the past month. But I wanted to touch on a few. So Allied Critical Metals announced an upsized life offering of $16.25 million. Voyager Mineral Explorers Corp. And Evolve Strategic Element Royalties announced a completion of an upsized $37.6 million brokered offering. Soul Strategies Inc. announced closing of upsized $30 million life offering, and Avanti Gold announced upsize of life offering to $25 million. Now, all of those except for Voyager Minerals were life offerings. So I wanted to ask you about this. So congratulations to all of you. Those are really impressive financings that we're seeing, really, especially out of what has been a very quiet market in Canada in general for quite some time. So these are nice numbers that we're starting to see, don't you think?
Yeah, they're fantastic, especially because, if you go back to the history of the life offerings, I mean, the market was almost dead from a financing standpoint. And the life offerings came out and, they were able to take advantage of it, and they weren't quite hitting the cap. And then they started hitting the cap, and now we're starting to see them go. As the caps got bigger, they're starting to really increase in size, and there's a lot of financing activity going on right now. Yeah.
So just to remind our viewers about the life offering, is an exemption, and what it is that the listed issuer financing exemption. What this means is the issuer needs to be a public company for at least 12 months, and then they're able to go and raise a certain amount of capital that has some framework around how much you're allowed to raise. And you're able to issue shares or stock that doesn't have the typical 4-month hold that a private placement would, for example. So, under a prospectus, you can issue stock that doesn't have that hold. So this is an exemption that allows you that same benefit. So shareholders can finance or invest and have free trading stock when they invest in it. So this came out, and they've now just recently upsized the amount that you're able to raise under this exemption. And very quickly after that was increased, we are seeing some pretty major financings happening. So obviously, this is an exemption that is fueling financing in Canada. Would you agree?
Yeah, 100%. Yeah. I mean, the bigger sizes, we're seeing more of it being done. It's fantastic to see.
Do you think this is also telling maybe the markets and the framework that, the 4-month hold period, that these exemptions are very valuable to investors and to companies?
Oh, yeah, 100%. I mean, the 4-month hold, while there's lots of investors who, participate in those, it's always nice to know that you have liquidity and you don't have to wait till that 4-month hold period. It's also nice for the stocks because, a lot of times when those 4-month hold periods would come up, there was a lot of volatility around stock prices, and it isn't typically up. It's typically down as, investors who have been locked in for the last 4 months plus a day now have a chance to sell.
That's right. And sometimes there's that mass exodus, and it can be hard for an issuer who is trying to create momentum to have that date where there's a bunch of paper that comes free trading. So anyway, congratulations to all of those companies. Those are great financings. They're all going into exploration, which is also really exciting and what we've talked about today. So this is not going into producing. This is going into further exploration, which is great. Bruce, what should we think about going into the rest of October and December before you and I get to chat again?
Yeah, I mean, I guess a couple of the things that we're probably going to be watching. One is, what we just talked about with earnings.
Yeah.
And then one of the things that we didn't talk about, but will be important as well, is what happens with interest rates. So the Federal Reserve's meeting later in October, almost near the end of the month. And, right now the market is anticipating, if you look at both, kind of what the forecasts are on poly markets or, even on a Bloomberg terminal. And, most people think that there's about an 85 to 95% chance they're going to lower rates again.
Yeah.
It'll be really interesting to see what happens. And that's going to all be dictated by what happens with the, financial releases between now and then, if we get them, if the government's still locked out.
Yeah. Yeah. Well, it'll be interesting. I mean, listen, it's always interesting to watch our neighbors, especially recently. Well, next time we chat will be in November. I will have just returned from my annual trip to Australia. We go every year for the IMARC conference, but we're especially excited this year because we will be finalizing the acquisition of the National Stock Exchange of Australia, which is really exciting for us at the CSC, and lots of exciting things that we have planned for the future for our goals in Australia, and how that'll benefit our issuers here in Canada. So let's talk about that next time I see you in November.
Yeah, sounds great.
Wonderful. Thanks for joining me, Bruce.
Yeah, have a great trip.
You too. Thanks.